Today I'm going to talk about one of the most important lessons I learned throughout my trading career. What we are going to talk about today is objectives and how to avoid low probability conditions as much as possible. What are the objectives? Every candle, what you guys need to know that every single candle, like every bit of candle, like every candle, any time frame that you see has its own objective. So today we're going to discuss weekly, daily, and session objectives. Why, you may ask? Because after the objective has been met, the trading probabilities go way lower, way low, way down low. Because after the objective is met, trading is low probability, and I'm going to show you how. Think about a daily candle. Daily candle opens. If a bullish daily candle accumulates, manipulates lower, then distributes to higher. Where does it stop? It stops to some kind of objective that it has, the price objective that it had. Maybe a buy side liquidity, maybe some inefficiency, a mitigation block, an order block, doesn't matter. And when it meets that point of interest, it accumulates. So price opens up, accumulates, manipulates, distributes to the objective that candle has, and then it consolidates most of the times, or it might get a slight reversal, which in my opinion is really low in probabilities. What do I mean by that? Okay, let's look at the weekly candles here. In my opinion, this week the weekly objective will be previous weekly low, this previous weekly low, and at max this low. If we have a good trading conditions, good distribution to the downside. And right after that, right after those objectives, my trading probabilities go low because all the high time frame targets has been hit. Let's look at the previous weekly candle. Previous weekly candle target was, what was previous weekly candle target? Previous weekly low, of course, after manipulated to the high, touched the order block, and it was previous weekly low. This inefficiency to fill it up, and maybe you could have thought of this candle's low as a target and this order block right here. What was this candle's objective? This candle's objective was, of course, previous weekly low, this candle's low, and as you can see, there is a short-term low here. If you don't know what a short-term lows and intermediate-term lows and long-term lows are, or highs, you can look the video on my channel. This is an old low. The price targeted after sweeping out previous weekly high and reversed, displays down, and took out this swing low right here. What was this candle's target? This candle's target was this swing high. But why can't we trade after that high? Because maybe we could have traded just bullish price action because we are at all-time highs. When we are at all-time highs, before bullish PDA gets disrespected, your bullish tilt fails. Okay, so after this swing high, you could have used deviation and targeted some kind of price the upside. So as you can see here, what was this candle's target? This swing high. This week, like whole week, your weekly objective was this swing high. After that gets hit. You might trade Friday, the TGIF on Friday, but other than that, the trading conditions are most likely going to be bad because the objective has been hit. How do we know? Okay, what was this candle's objective? The Monday 10th June 10. What was this candle's objective? Because we have everything taken, right? At minimum, the previous weekly high, the objective, but that's not objective that this candle is going to have, right? No, this is like couple 150 points for a weekly candle. That's too low. What can we do in these conditions? We go on a lower time frame. As you can see, we have a last manipulation leg here, And what he could have taken as a weekly objective is a deviation. -2 to -2.5 could be your weekly target, or a middle point of that. If I go on a weekly, as you can see, I marked out this candle's manipulation because it was the last down close candle before the move up. So you could have targeted this week a -2 and -2.5, and after that, the trading condition is going to be bad. Okay, let's go on the daily candles now. On the daily, what can we see? On the daily, this day, the target, the Wednesday, the target was obviously this swing low and this inefficiencies down here. After this, whole 100, like 600 points, after this 600 point run, you think after price dumps this much, you're gonna take a trade, you're gonna buy for some liquidity sweep? No, that is such a false mentality. So let's take a look at this candle. It manipulated high and it dropped down to where? Where was this candle's target? This swing low down here. And we potentially could target this swing low, which happened the next day after this low has been hit. The trading conditions is going to be really choppy and not like directional. If you want to trade high probability market, if you want to trade that, you need to implement this in your trading, because after this objective, maybe you missed the trade. If you miss a trade and your draw liquidity has been hit, the trading probabilities go low, and you need to understand that. Every single candle on every time frame has its own objective. Let's take a look at the session objectives now. Let's say we're trading a New York AM session. A New York AM session, right? Like its objective was like this low, right? This low was its objective, or even the like higher time frame lows down here, like this low. Like this low was the target of that. Okay, this was the target of this AM session. This AM session move happened just because to hit this lows and hit the high time frame target. After this low has been hit, your trading conditions is going to look like this. Now tell me, now think about it. Is this condition better or this one? Which one is better? Of course it's going to be this one, because you're trading, also you're trading internal to external range liquidity, and after the external has been taken, you're trading to take a trade into the internal, which I'll tell you a couple more reasons why this is low probability. The time is the major factor as well, because this time, the directional time, like New York AM session, this New York AM session hit every single sell side that it has to hit. And after that, trading conditions going to look like this. Even like this, because look, we have an Asian here. This trading condition, you want to trade this? You're going to tell me that you're going to be profitable in these trading conditions or in these trading conditions? It could have taken trade on 1 minute time frame, but I'm not talking about that. I'm talking about the probabilities here. If you want to trade the high probability market, you gotta want to be patient. If you miss this move, you gotta get off and maybe take a walk, or wait for another day. Wait for another trading opportunities. I'll show you one more example. As you can see here, New York AM session manipulates up, takes out all of this low resistance liquidity highs here, and displaces down. What was the objective here of this session? This low, obviously. After this low has been taken, was price moving properly before PM session? Like before PM session, PM session target was what? This high. After this high was hit, it was consolidating. You did nothing else. After this sell side has been hit, what did price do? Had a back and forth. Not much of a good price action here. The low probability traders take this high, take the buys here, and they got stopped out. Because price is choppy here after the high time frame target has been hit. and the objective of that session has been hit. So I think this was it, really. I think I gave you a really good information about the markets to trade high probability conditions, because I trade discretionally, and if you guys trade discretionally as well, you need to implement some kind of rules in your trading. Yes, your trades doesn't look like the same every time. It's not mechanical, but you need rules. Without rules, there's nothing that can stop us from losing our money. And these rules like this, that you're gonna stop trading after the target has been hit, is gonna save you a lot of money. Trust me, guys. Well, thank you for listening, guys. And if you found this video insightful and helpful, subscribe and leave a like, and follow me on other socials as well, because I'm planning on doing a lot more content than I have now. So as always, goodbye and have a great trading.